John, in the lead up to Christmas, what can you tell us about the Australian economy and likely opportunities? Do consumers have reason to end the year feeling a little more positive?
Yes, Danielle, I believe they do for a number of reasons. Firstly, we've seen a decrease in interest rates by the Reserve Bank, which will be a good thing for particularly homeowners and mortgage payers. And hopefully it'll stimulate some spending in the Christmas season via the retail sector and translate in a more positive attitude by Australian consumers. But I think the Australian growth figures have been very, very pleasing, and the recent company reporting season has shown an increase in corporate profits, and we've now seen quite a strong re-emergence of company dividends, which is good for shareholders. So by and large, whilst the economy is now resource-driven, in an overall sense, we're doing very nicely, certainly on a world comparison standard. And in fact, the IMF sees Australia as probably the star and the crown of the developed world. In terms of opportunity, well, we steadfastly stick to our disciplined portfolio rebalancing approach, so we're going to be looking for opportunities, taking profits where we can, and certainly putting an emphasis on dividends, that there's some very attractive income streams to be gained from the Australian share market through quality blue chip shares. And with a decreasing interest rate, we're looking to bolster up our clients' cash flows. So there's certainly some great opportunities in the markets at the moment. The property market's come off 20%, so there's starting to look like some attractive buying in that market as well. So in the overall scheme of things, we're very pleased and comfortable with the Australian economy and see some really good opportunities going forward.
With the situation in Europe likely to continue for a while longer, how's the global economy playing out at the moment?
Yes, well, the European situation just goes on and on and on. But we have seen some significant changes, and just very briefly, the Greeks and Italians have now appointed non-political leaders, and their governments have basically agreed to adopt a unilateral approach to fiscal responsibility. Very positive move, and supported by the Central European controls, which have look to recapitalise the banking system, and we've just recently seen that 26 out of 27 members of the European Union have voted to enter into centralised fiscal management effective from March next year. The United Kingdom abstained, so they're basically standing alone, but nevertheless this is a very good outcome, and really I think it's the direction that the world wants to see, and as those arrangements get put in place next year, we'll see the fear of a European collapse go away. I mean, there's now no question about the European Union staying intact, and probably that was always going to be the case. But these things have to work through. But it's interesting looking at some of the history, in that these aren't recent events. The Greek debt was 100% of GDP when they entered the Union in 2001. Now it's 150%. So there's no surprises here. I mean, this situation's existed for a long time, same with Spain and Italy. But it's probably comparable to what happened before the global financial crisis, where the issue was debt. And what was acceptable debt prior to that time is not acceptable debt now in the corporate world. And we've seen particularly real estate companies having to down-gear their debt from what was acceptable at, say, 60% to what is now acceptable at 30%. And what that means in the overall sense, particularly here in Australia, that corporate Australia has much less debt than it had before, which makes it stronger and more resilient. So it's all really, at the end of the day, it's good news, but it's going to be painful working it through. So we will have some volatility continuing, but the picture is getting better all the time.
Now, this year's been a busy one for financial services reforms. How's your industry responding to the government's changes?
There's a lot of controversy around the government reforms. I mean, our view of the reforms themselves is very positive. I mean, we fully support the banning of commissions. We fully support the put the client first philosophy, which has always been our philosophy anyway. But there's some issues about the structure of the financial industry that's really causing some problems. When the final draft of the legislation came out, what had been previously indicated to not be retrospective has in fact turned out to be retrospective, and that relates to the issue of ongoing charges, where in the past clients may have been charged without being absolutely clear that they were being charged via the product manufacturers. Will now have to be informed of that charge and sign up to what they call opt-in. If a service isn't being provided, the client is not going to opt in to continue paying for it. So there's a real issue for the profession and the industry to ensure that they're providing the service. You can't expect to be paid for something you're not providing.
Well, surely that's a good thing.
Well, absolutely, no question about it. But it's going to seriously impact the business models of many, many companies. And we've seen just recently some major mergers and takeovers of companies that have had to say, this is going to break our business model and we can't adapt, so we're going to have to sell out. And we expect to see a lot more of that, which, you know, that's a good thing. What's bad about it is that we're going to see much more polarisation of the advice profession, where most of the advice firms are going to be owned by institutions, banks and large insurance companies and so on. We philosophically don't feel good about that. We believe that professional advice should be independent, and there won't be many independent firms left once this process is seen through. Maybe there'll be a re-emergence in the future, but I think that's probably a shame from the industry's point of view. But from our point of view, we're fiercely independent, and we believe in independence of financial advice to the Australian public.
Any closing remarks for clients?
I think probably from where we sit, Danielle, we're just very grateful to our clients for supporting our philosophies and making decisions without panicking or being overly influenced by sensationalist press. That's paid off for them and will continue to pay off for them. So we're very grateful for that. But we'd just perhaps like to, on behalf of my colleagues, wish all of our clients and our colleagues a very happy Christmas and a much more successful new year coming forward.